A very, very warm welcome to all of you to today's virtual coaching class. This is your faculty, CA Ridhima Bhatia, and we are doing PGBP. This is our second class for profits and gains of business and profession. In the previous class, we discussed how do we compute the PGBP income in your section 29. Then we started the discussion deductions for section 30, 31, 32. Depreciation is over. Till the previous class. Today, the list of deductions will continue and we'll be doing beginning from your section 33AB. Having said that, today's deductions would be more over related to a particular type of expenditure or to a particular type of your SSE who's into a particular type of business. So before again we proceed, again a very warm welcome to all of you, and any other query, any other particular question from the previous class which you would like to take. Again, I will request everyone to be as participative as they can, because again, me doing questions will be of no use until and unless you people do it with yours, as in simultaneously, and share the answers. Please do not hesitate that if you will share a wrong answer, or I may take name which is with the not correct answer, because doing it now will obviously help you not doing any such mistake in future. So please again, because unlike the previous batch, this batch is quite less participative. So I'll request everyone to be as much participative as they can. Any queries? So while I share the screen, if there's any query, you can let me know. Okay, so Neil, just wait for probably this week, by 10th, maybe you get your material updated on the site. Meanwhile, whatever we are doing, more or less it is same. If there's any amendment, I am specifically trying to be as much focused on it so that you can know. But meanwhile, you can go through, because for the PGBP part, up till now, there are not such any such very high amendments or very number of amendments which might create a problem solving a question. Okay, so just wait for another week. Yes, Mugda, this is for our CA final for May 21 attempt. The assessment year we are covering here is your assessment year 21-22. So all the amendments and latest updates will be covered here. Sandeep, this is altogether a new assessment year which we are covering, which will have all the amendment in it in relation to assessment year 21-22. Chalo, so great. So now let's begin. Now we'll be doing section 33AB. Before we proceed section 33AB, let's just first read the heading. It's called tea development account, coffee development account, and rubber development account. Obviously, you have heard this word in our first class of section 10, where we were doing agricultural income, and that we read of rule 7, 7A, 7B, and rule 8, correct? So yes, this is something in related to it, but let's see how this works. Now, first of all, again, this is for the SSEs who are into growing and manufacturing of tea, coffee, or rubber. Okay. Now, this is for them who are into the business of growing on and manufacturing your tea, coffee, or rubber, and in India. Now, इसमें you get a quantum of deduction. There is a deduction which you get. What is the quantum of that deduction? Any person who is engaged into the manufacturing of tea, coffee, or rubber will get a deduction of the amount deposited or 40% of profits, whichever is less. 40% of profits, like profits of such business, amount deposited or profit, 40% of profits, whichever is less, in an account which is maintained with NABARD, in a special account maintained with NABARD, or into any special scheme account as per your tea board, coffee board, or rubber board. But this has to be done within, this got hanged. Yeah. Within 6 months of the end of the previous year, or return filing, whichever is earlier. So now if I just make this into a sentence, or the due date of return filing, whichever is earlier. So what did I say? Again, take yourself as a person who is into the business of growing, manufacturing tea, coffee, rubber, any business you like. Okay. So now you will get a deduction out of the profits of this business up to the extent of 40%, or the amount deposited, whichever is less, in a special account, not only in your own home or not into any ordinary bank account, but in a special account with this name, tea development account or coffee development account or your rubber development account, which is maintained either with NABARD or with a special scheme under their respective boards. Okay. But by what time I have to deposit such amount? To get the benefit, I have to deposit it within 6 months from the end of the previous year, or my return filing date, whichever is earlier. Now, if my return filing date is 31st July, then 31st July is the time period. If my return filing date is 31st October, then by 30th September, I have to deposit it to get the benefit. So if I say, that I am a tea manufacturer and I have a net profit of 10 lakh. If I deposit 3 lakh rupees, then I'll get 3 lakh as deduction. If I deposit 5 lakh rupees, I'll get 4 lakh as deduction. If I deposit 7 lakh rupees, then again 4 lakh of deduction, but obviously before the due date of return filing was 6 months, whichever is earlier. Now a question comes, obviously, why this is done. Now this is done to encourage such tea manufacturer or coffee manufacturers or rubber manufacturer to have a special fund which is dedicatedly for their business only, for the growth of their business only, for the cultivation of their business only. Because again, the more fund you have handy specifically dedicated to such businesses, the more incentives they give you. And they will give you incentives, then only you will be the one who will be saving. If they will not give you incentives, you will not save, because then ultimately you will be using such fund for the purpose of your tea, coffee, and rubber growth and manufacturing only. But they want you to encourage a habit of saving a specific amount for such purposes. Okay, clear? Any doubts? How many of you know what is the latest return filing dates as per now Finance Act 2020, Section 139, subsection? What are the due dates? So the due dates for company, for tax audits, and for the partners of the firms whose accounts gets audited under this act or any other act is 31st of October. But tax audit report has to be filed by 30th of September. And for your TP on whom transfer pricing provisions apply and who has to file a report under section 92E, for them it's 30th November, the return filing date, and for others it is 31st July. Okay, so please be very careful. Now, next step in this is to claim the deduction here. You need to deposit such amount, but also you need to get your accounts audited. So audit is mandatory if you need to claim a deduction under section 33AB. If you need to claim a deduction under section 33AB, the audit is mandatory. Now we come to a part that how this amount has to be utilized and when this amount has to be utilized. Now please listen carefully. Out of my profit, I deposited this in a special account with NABARD. Okay, I deposited an amount with special account in a special account with NABARD. Now this amount can be utilized when withdrawn. Can be utilized when withdrawn in the same year. So from 10 lakhs, I have deposited 4 lakhs. Let's take this example. So now here the balance is 4 lakhs. Clear? Now when I withdraw the amount, so if I withdraw say 3 lakhs rupees, please listen carefully again. If I withdraw the amount of 3 lakhs rupees, first condition is that it has to be utilized in the same year when withdrawn. Number one. You will get the deduction when you will make the deposit. This is clear. But now how do you have to utilize? When do you have to utilize? You may not withdraw it over a lifetime of the business. That is one thing. You may withdraw it after 4 years, after 5 years. It is totally on you. But whenever you withdraw, you have to use it on this in the same year. So if you say, ma'am, if we withdraw on 30th March 2021, then it is always, if you do not want to have obviously out of genuinity they may give you, but as per rule it has to be used by 31st March of 2021. Again, I'll repeat, the deduction would be allowed at this stage, but now I'm coming to how to utilize this amount. And misutilization or non-utilization would again result in taxability. Deduction would be allowed here, but now it may be kept for years and years, or it may be utilized immediately after deposit. That is totally on you. Now I withdraw 3 lakhs rupees. First condition is it is to be used in the same year when it is withdrawn. Second condition, I can use it for any purpose. I can purchase plant and machinery. I can use it for any purpose, but obviously in relation to the one which are specified by my tea board, coffee board, or rubber board, and they will be definitely in relation to my growth of business. I may purchase a high quality fertilizer. I may purchase high quality seeds. I may purchase an equipment to water such plants. Anything I can purchase. Okay. But yes, having said that, there are certain things. If I withdraw this 3 lakhs rupees, suppose I made this deposit in previous year 18-19. Now in previous year 2021, I am withdrawing this 3 lakh rupees. And I use it to purchase seeds. No, I use it to purchase seeds. 1 lakh I used to purchase seeds and fertilizer. Now think and tell, if I use and purchase fertilizer of 1 lakh, I will not claim deduction of this. You will say, ma'am, why? Simple. Again, take this hand. I took 4 lakh out of this and I got the deduction. Now out of this 4 lakh, when I'm making some revenue expenditure, again, if I will claim deduction, that would be the thing of double deduction, which is not allowed. So when I utilized it out of this 4 lakh, I have already claimed my deduction at this 4 lakh stage. Now, when I'm utilizing this, I will not again claim deduction in my profit. So hence, when you will read it in your books or in your modules, and it is written that any amount of revenue nature which is spended from the amount withdrawn from such deposit will not be allowed as deduction, you will like, what are they saying? So this is the logic. I have already claimed deduction at the time of deposit. Now I am just utilizing it. So utilizing it for the purpose will not give me the deduction in previous year 2021. Simple. Yes or no? Okay. Now for the plant and machinery. Again, I can purchase any plant and machinery from such withdrawal. Now out of the remaining 2 lakhs, 3 lakhs I withdraw, 1 lakh come in a raw material seeds area. Now the remaining 2 lakhs, I use it for purchase of plant and machinery. Fine, not an issue. But if I purchase any plant and machinery which will be installed in office or residential space, which is an office appliance, excluding computers. Computers can be purchased, okay? Or any plant and machinery which will be allowed as 100% deduction. If I purchase any such thing, that would be called as misutilization of fund. And when there is misutilization of fund, the amount withdrawn will become taxable. Again, do not think over it that, ma'am, it is confusing. Take it as a story. Simple. I deposited 4 lakh rupees here. I got the deduction. Out of this 4 lakh, if I'm withdrawing it, I have to utilize it in the same year. Now, if I use it for the purposes as per scheme, no problem. But if I use it for any purposes not as per the scheme, the amount would be taxable. If I purchase any plant and machinery which is installed in office, residential, or any office appliances, but computer is allowed, that means I can purchase computer, or any plant and machinery in which I will get 100% deduction on purchase, or which is legitimate for 100% deduction, then whatever amount withdrawn would become taxable. Simple. Computer for office use need is allowed. Clear? Now, this thing clear? Question will come. Now you will be able to solve it. Yes. Ma'am, what if we do not withdraw it during our lifetime at all and we close our business, or if we are a firm, the firm gets dissolved. So if you do not withdraw anything in case of closure of business or in case of dissolution of firm, the amount after closure of business, obviously you will go and withdraw it, the whole amount will become taxable. So closure of business or dissolution of firm, the whole amount will become taxable. But on the contrary, if there is death of the assessee or there is partition of HUF or there is liquidation of company, in sub event pay, if the account has to be closed and the amount has to be withdrawn, nothing would be taxable. Okay, so in all these events, nothing would become taxable. In these events, if the amount is withdrawn because of these events, it would be taxable. Clear? Audit mandatory, clear? Everything clear. Now, last point of this topic. The plant and machinery which I purchase, suppose this is, the plant was not this, I purchased a special equipment to irrigate my fields. The plant and machinery which is purchased cannot be transferred or otherwise before the expiry of 8 years, from the end of the previous year in which it was acquired. Now, students, again, there will be many instances throughout your Income Tax Act where you have to understand and remember the time period. Okay? And you have to remember it that whether it is beginning from the previous year included or whether it is beginning from the end of the previous year. So please try to memorize it as much as you can, and be very much important, because these are your red flags, that it is 8 years from the end of the previous year in which it was acquired. So if I acquire it in my previous year 2021, 8 years will begin from previous year 21-22, and I cannot sell it till my previous year 28-29. And if I sell it, what will happen? Whatever amount was purchased, as in whatever amount was utilized for the purchase of this plant and machinery, would be my deemed profit, and would be taxable in that year. So again, I can, from this amount which I deposited here, I can purchase plant and machinery, but that plant and machinery should not be sold within the period of 8 years beginning from the end of the previous year in which it was acquired. And if sold, whatever amount was utilized for this plant and machinery would become my deemed income, And secondly, us time pe you will also have capital gain. That would be different. Capital gain obviously hoga sale minus cost. That would be different. This is deemed profit, one thing, and capital gain, which would happen on sale minus cost, that would be different. Next question. See, I told you, now please think and apply. I told you there is no taxability on amount being withdrawn until and unless it is utilized in the same year. And if it is misutilized, the amount would be taxable. Correct? But if you will not withdraw it for years, that is not an issue. Then I told you that if you withdraw it and use it for any revenue purpose, it is called utilization, but at the same time, the revenue expenditure ka deduction will not be allowed. Then I told you, you can again purchase it, some plant and machinery equipments for your growth of your manufacturing of, growing of, or manufacturing of, or cultivating of tea, coffee, rubber. That is fine. But that would be utilization. But if you use it for any purpose other than any plant and machinery in this category, which is office, residential, installed office appliances, or any plant and machinery in which you will get 100% deduction, then it would be a misutilization and would be taxable. Now, my question is, on this 2 lakh, if I've purchased a legitimate plant and machinery, it is not a misutilization. Can I get depreciation? Can I get depreciation? Can I get depreciation? Yes, I can get depreciation on this new plant and machinery. New plant and machinery ke purchase mein I am not getting deductions. Revenue expenditure mein I am not getting deductions. But this 2 lakh ka plant and machinery pe I can get my depreciation from the profits. Clear? Yes or no? Abhi I'll do one more question and then it would be more clear. Also, students, if you transfer an asset to government, or if there's a case of succession where the firm is succeeded by your company or LLP, that would be allowed. Provided the asset goes in the name of the company. Okay, ma'am. I will come to your thing, Aman. Don't worry. Need this see, if you are making a deposit in such account, which is your NABARD account, Then the again utilization is mandatory. Again, I'm saying if you're not withdrawing it for years to come, that is totally fine. But the moment you withdraw it, you have to utilize it for such purposes. It's just like you have kept an amount saved in some other account, and when you withdraw, you have to utilize it for that purpose. Okay, now just one thing before we do a question, and then probably after question, all your doubts would be clear. Now, can I ask one thing? If you remember this Rule 8, where I told you that if you have an agricultural income, agriculture business in the nature of tea, there would be definitely, as per Rule 8, 40% would be business income and 60% would be your agricultural income, which would be exempt. How many of you remember this? Now, how many of you have thought that, ma'am, what about this Rule 8 in this 33AB? What about this Rule 8 in this 33AB? So my answer to you would be that Rule 8 would be applied. Rule 8 would be applied after my net profit comes, which would be after depositing it into my NABARD account. So I gave you an example that where my net profit was 10 lakh, I deposited 4 lakh. 6 lakh is now my business income from tea business. Okay. Now in this 6 lakhs, I will now apply my Rule 8. I will now apply my Rule 8. So on this 6 lakhs, my 2,40,000 would be my business income and 3,60,000 would be my agricultural income, and hence only 2,40,000 would be taxable. Okay, this is how things go. So here this is 33AB, and then after 33AB, that is after depositing the business profits, whatever comes, this would be agriculture and this would be business. Depreciation would be allowed on the utilized asset also. Depreciation would be allowed on the utilized asset also, Preeti. What else? We'll do a question. More clarity will come. Don't worry. And after this, if again there's some part of brought forward business loss, that would be adjusted from this taxable business profit. Okay? So this is how the thing goes in a tea or a coffee or a rubber account. First, you will deposit it. You will get your net taxable business income. Usme you will apply the Rule 8, agricultural business, and then if there's any brought forward loss, you will adjust it. And then the final amount, if any comes, or if there's any net loss, that would be carry forwarded. Now, let me do a question for all of you, which is there in your module. There's just one question. Chances of this section coming is not very frequent, but when it comes, it can come as a compulsory question of 5 marks. So you should not take a risk of not understanding this concept. Savita, just 1 second. Sorry. Okay, so again, I'll explain for the rule. See, again, to summarize it, you will get deduction while you're making the deposit. You will not get the deduction while you're utilizing it. First thing first, please write it bada bada. You will get deduction when you are making the deposit, not when you are utilizing it. But yes, taxability will trigger if you misutilize it. Is it clear? Yes. Now the deduction is allowed when you make a deposit. Now after this amount, What about rule 8, which we studied in agricultural income, that this much part is exempt and this much part is exempt as agricultural income and that much part is taxable at your business income. So in case of tea, which is rule 8 for tea, there is 7A, 7B, which is for your coffee and rubber. Rule 8 में tea is my agricultural income to the extent of 60%. 40% is my business income. So whatever amount comes net of the deposit, which is this, whatever amount comes net of the deposit, 6 lakhs में से 40% business income, 60% agricultural income. And if I have any brought forward business loss, that I will adjust obviously with my business income, which is this. Any doubt? No. Now let's take the question. G Limited, a company in which public are substantially interested, is engaged in the business of growing and manufacturing tea in India. For the previous year ended 31st March 2020. 31st March 2020, that is, we have the data for previous year 1920. Please again careful. Its composite business profits before allowing deduction under section 33AB is 60 lakhs. On 1st September 2020, it deposited a sum of 11 lakhs in tea development account. During the previous year, 2018-19, G Limited had incurred a business loss of 14 lakh, which has been carried forwarded. On 25th January 2021, it withdrew 10 lakhs from deposit account, which is utilized as under. But if I make a picture first of previous year 1920, what would be as per the question? They say in previous year 1920, they say in previous year 1920, there was a profit of 60 lakhs, out of which 11 lakhs were deposited in my tea, coffee, rubber development. So you will obviously check 40% of profit or the amount deposit, whichever is lower. 40% of profit is 24 lakhs or 11 lakh, whichever is lower, 11 lakh. So 11 lakh ka deduction I get in 33 AB subsection 1. Now this comes to 49 lakh. Any doubt? Abhi I'm doing the calculation for previous year 1920. Utilization pay, I will come later. Now previous 49 lakhs में से 60% would be my agricultural income as per rule 8. Agri income, ठीक है? As per rule 8, 49 lakhs में से 60%. 29,40,000. So 19,60,000 is my business income, correct? जिसमें से they told that I have a business loss of previous year 18-19, which is 14 lakhs. So loss to now 5,60,000 is my previous year 1920 ka taxable income. Now, do you get it how to solve it? I hope so. Now, let's come to what happened in my current previous year, which is previous year 2021. What happened? On 25th January here, it withdrew 10 lakhs. It withdrew 10 lakhs from the deposit account, which is utilized as under. Ab now 10 lakhs has been deposited out of the 11 lakhs which were 10 lakhs has been withdrawn out of the 11 lakhs which were deposited. Okay. So now 10 lakhs has been used as 6 lakhs for purchase of non-depreciable asset as per the scheme specified. 3 lakh for purchase of machinery to be installed in the office premises. 1 lakh was spent for the purpose of the scheme. It was spent for the purpose of the scheme, but was spent on 5th of April 2021, which is my next previous year. You are required to determine the business income of G Limited and the tax consequences that may arise from the above transaction in the relevant assessment year. Okay, first thing. Now, for the current year, we are not given any business, any profits knowledge, any deposit knowledge. So we will work purely on the knowledge which is given, on the information which is given, which is this. 10 lakh was withdrawn. Out of this 11 lakh, 10 lakh was withdrawn. Out of which this 6 lakh was used for the purpose of purchase of non-depreciable asset as per the scheme. So this is the correct utilization. This is the correct utilization. Yes or no? Yes. Now 3 lakhs. So iska we will have no impact. Why? Because utilization is correct. Already deduction is claimed, so nothing to worry about. Now this 3 lakh was withdrawn to purchase an office machine, a machinery to be installed in office premises, which is a misutilization. Correct? Yes. So misutilization hua to what will happen? This 3 lakh would be taxable. Yes, 3 lakh would be taxable. Correct. Then, and the remaining 1 lakh was spent for the scheme, but it was spent in the next previous year. It was spent in the next previous year, but here we know that amount when withdrawn should be utilized in the same year. So hence not utilized in the same year. Hence this is also taxable. So this 3 lakh is taxable and 1 lakh is taxable. Any doubts? But not full 3 lakh or 1 lakh would be taxable. You will say, ma'am, why? Because suppose, just listen, if I would have not deposited this amount, if I would have not deposited this amount of 3 lakh and 1 lakh, what would have happened? At least I would have received, if I would have not deposited this amount of 3 and 1, at least I would have received the exemption of 60% and only 40% would have been taxable. So same would happen here also, that this is a misutilization. Taxability is triggered, but it would be only taxable to the extent of 40% because 60% is my agricultural part when it comes to the final taxability in case of a tea business. Correct? So only 40% would be taxable, which is my 1,20,000. Yes, and it's maybe only 40% would be taxable, which is my 40,000. So only 1,60,000 would be taxable during the previous year. Now tell me if there's any doubt before I proceed to the next part of the question, that why 1,20,000 is taxable and why only 40,000 is taxable. Savita, now is it clear? Everyone, take a minute. Take your time to digest it. I'll also leave to the part here which is written. Clear? Good. Now to the next part. What will be the consequence if the asset which was purchased for 6 lakhs is sold for 8 lakhs in the April 2021? Now again just focus on this concept. Deposit pay deduction is allowed, utilization where there is no deduction, misutilization where there is taxability. Taxability is up to 40% only. When we talk about tea business, if a question comes of coffee, please do not do 40%. It would be either 25% or 40%. Remember your rules, okay? So now, what will be the consequence if the asset was purchased for 6 lakhs is sold for 8 lakhs? We cannot sell our asset within for 8 years, beginning from the end of the previous year in which it was acquired, but it is sold immediately in the next year. So what will happen now in previous year 21-22? What will happen in previous year 21-22 now? This 6 lakhs. This 6 lakhs, which was new asset, new non-depreciable asset, is sold for 8 lakhs. Correct? Now this 6 lakhs would become taxable because whatever amount of new asset, the cost becomes deemed income, But only to what extent? Only to the extent of 40% because it's a T business. So how much would be taxable? Only 2,40,000 would be taxable in previous year 21-22. But at the same time, this is the reversal of my deemed income. But at the same time, I have sold an asset of in value of 8 lakh. This is a short-term capital gain. January may I utilize the amount. April may I am selling it. So short-term capital gain of 2 lakh. And इस पे 2 lakh पे please do not apply 40% because this is a capital gain income. And 40% is only on the business and agriculture part. Okay, so this 2 lakh would become taxable as short-term capital gain. And 40% of 6 lakhs, which is the reversal impact, would become taxable. So as per section 33AB, if the asset is sold before the expiry of 8 years from the end of the previous year in which it was acquired, then the cost of such asset shall be deemed to be the profits and gains from business or profession of the previous year in which the asset is sold. However, since the full cost of asset was deducted in the assessment year before segregation of agricultural income and non-agricultural income, the agricultural and non-agricultural income should be segregated in the year when it becomes taxable. Therefore, 3,60,000 of 6 lakhs would be represent as agricultural income and remaining 240 would become taxable. But there would be a capital gain income also in the nature of short-term capital gain. Aman, now is the question clear that this is how the question will come? Good question, Padmanam. 1 lakh which becomes now taxable will be allowed as a utilization in the next assessment year? No. No. The concept is utilize, withdrawn will trigger taxability if misutilized or non-utilized in the same year. It would not be considered as utilized and you will not get a deduction in the next year. Short-term capital gain. Savita, short-term capital gain on sale of the asset, because one impact is of reversal of the deduction which you claimed. Another impact which anyway would have happened if you're selling a short-term asset, which is this. Good. So this is how a question can come if you will have this thing as a clarity that on deposit I get deduction, on misutilization taxability will trigger 40-60% wala point. You will definitely be able to solve any tea, coffee, rubber development wala account. But again, I will say 40% is only for tea. If a question comes from coffee, please see whether it is 25% wala case or my 40% wala case. Next is for my side section. Next is site restoration. Site restoration fund. Section 33ABA. Now this is exact copy of my section 33AB. Only here is the assessee who is into the business of prospecting or extraction of or production of petroleum or natural gas or both in India. So they will get this deduction. Here, the only difference between section 33AB and 33ABA is that this is for those assessees who are into the business of risk, again, extraction of minerals, petroleum or natural gas. Another difference is that there the deposit can be up to 40%. Here it is either 20% of the profit, 20% of the profit, or amount deposited, whichever is less. वहाँ पे 40% is the limit. इसमें 20% is the ceiling limit. Second difference here is that in tea, coffee, rubber development, we can make the deposit at any time within 6 months from the end of the previous year, or return filing, due date of return filing, whichever is earlier. Here, the deposit to claim deduction has to be made in the previous year itself. In the previous year itself. That's it. Rest everything is same. Utilization is same. Misutilization is same. Plant and machinery cannot be sold within 8 years. Audit is mandatory. Every else thing is same, but only is the ceiling limit, which is 40% in your 33AB. Here it is 20%. Here, there you have extended time after the previous year to make the deposit. Here you have to make the deposit in the previous year itself. Which account? Again, in a special account as per the board, as per your board, in a site restoration account as per the scheme, or in a special account maintained with SBI, or in a special account maintained with your State Bank of India. Okay? Yes, Anjali, in the question which we discussed, both 2 lakh, which would be taxable as capital gain, and 2,40,000 would be taxable as my business income, being the reversal of the deduction which we claimed. Okay, so 33AB and 33AB clear, ABA clear. Very, very important section is now is my section 35. Very, very important section. One second, sir. Expenditure on scientific research is our next section. Anyone has any doubt? Anjali, reversal or deduction not understood. Okay, Anjali, see here. Well, see, forget about anything. When you have a capital asset or a non-depreciable asset and you sell it, capital gain will trigger. I sell the asset within 5 months. Short-term capital gain, yes. 6 lakh ka asset I sold for 8 lakhs. Short-term capital gain, 2 lakh is my short-term capital gain. This part is clear? Yes. Now, the asset which I sold, now there's a backstory of the asset which I have to also focus on. Now, the asset which I sold was a result of a deduction which is claimed. What deduction is claimed? When we deposited it. We claim the deduction. Again, I was telling you the deduction happens when you deposit it, not withdraw and utilize it. But when you misutilize it, then there is the taxability. And by misutilization, I mean into some plant and machinery which is not as per the list, or if you purchase a plant machinery which is eligible, but then you sell it within the period of 8 years from the end of the previous year in which it is acquired. That happens, there would be the trigger of income, the trigger of taxability. There would be a trigger of taxability. Why? Because we claimed deduction while depositing, but now we have misutilized it. So now out of that 6 lakhs, which I was claimed as deduction as on account of plant and machinery, will now become taxable, So 6 lakhs would become taxable, but since it's an agricultural income concept and we are into tea business, only 60% would become taxable, which would be 2,40,000. So in previous year 21-22, one would be capital gain, which would happen in any case. Any plant and machinery being sold at a higher price, capital gain would happen. But another would be this 2,40,000, because this is a result of a deduction which was claimed from my profit, and now I have sold it. So that has to be reversed. Hence, this would come. Totally similar to what you people do in your section 54 exemptions. Usme bhi you don't have to sell your asset within 3 years. So when reversal happens, capital gain comes into picture, and also the income which is claimed as deduction becomes taxable. Totally same lines. Anjali, is that clear now? Okay, so Sandeep, in case of 33 ABA, there is no difference except 2, or you can say 3. The capping instead of 40% is 20%. In 33 AB, you have to deposit the amount within 6 months of the previous year, end of the previous year, or return filing due date, whichever is earlier. But here, for claiming the deduction under section 33 ABA, the amount has to be deposited in the previous year itself. Then only you will claim the deduction. There is no extended time period of 6 months or return filing date takka. And then here you have to deposit it in the SBI account. Wahan pe there is NABARD. Okay. Now we move to section 35. Section 35 is a section expenditure for scientific research. अभी तो बहुत around the world इतना scientific research चल रहा है, so you will understand. Now, if you remember, we did it in section 10 that an entity which claims deduction as per section 35 subsection 1 clause 2 3, anyone remember? No. So section 10 clause 21 may there were the entities whose expenditure or whose contribution gets exempt under or gets a deduction under section 35. They were covered here. Now I will relate. Now you are an assessee. Let's put this on hold for a few time. Okay, section 35 will give you a deduction when you are doing some expenditure for scientific research. Now here there are broadly 2 categories. One is when you are in-house into your in-house research. That means you yourself are conducting research and you are spending the amount on scientific research. Another is when you make contribution to third party. That means you are making a contribution to any party who is doing scientific research. Now, you may or may not be into a business of scientific research. Contribution would be allowed. Now, this year, which is your previous year, 2021, have certain changes in section 35. So those who are referring to the old module, I would request everyone's attention on the screen first, and then you can make a comparison. Okay? So previous year 2021 says expenditure for scientific research would be allowed. First, I will come to in-house. In-house means that you are into the business of scientific research. What will happen? As per section 35, subsection 1, clause 1, any revenue expenditure which you do for scientific research would be allowed as deduction. Any revenue expenditure which you do for scientific research would be allowed as deduction. But also at the same time, as per clause 4 of this subsection, if you do any capital expenditure, that is also allowed as deduction. Any capital expenditure except of the value of land, that is also allowed 100% as deduction. So suppose for scientific research, I purchase a plant and machinery, which otherwise go into a block and then 15% depreciation is allowed every year. That plant and machinery would directly go in my P&L account as 100% deduction under section 35, subsection 1, clause 4. Clear? So this is the significance of the section, that you get the capital expenditure also as deduction except for the value of land. But now here again, interesting thing is that in addition to the expenditure, current year expenditure or capital expenditure, you also get prior period expenditure as deduction. And prior period would be three previous years preceding the previous year in which you began the in which you began the business. So 3 previous year, may whatever revenue or capital revenue and capital expenditure which was incurred will also be allowed as deduction in the first year itself. But for revenue, you will only get the deduction of, for the preceding previous May, you will only get the deduction of the raw material or the salary of the personnel who are employed on research. Now, what did I say? Now, coronavirus ka, let's suppose medicine, or do not, let's take example. Let's take into any some research. I am into a research of a particular formula. Okay? Obviously, before beginning of the business, the research goes at a much back time. Now, suppose I start my business today. Whatever research I have done in the 3 previous year, usme the expenditure of raw material and salary along with the capital expenditure would be allowed in the year when the business commences. Only for the 3 previous years, and that too only raw material or salary or the capital expenditure. But again, except land. But obviously, to claim the expenditure, I should have a certification from the prescribed authority that for the 3 previous years, so much of the expenditure was there on raw material and land. And whatever capital expenditure, please again listen carefully, whatever capital expenditure which is in relation to scientific research, if does not get absorbed fully from the profits, can be carry forwarded for an infinite period for adjustment. Can be carry forwarded for an infinite period for adjustment. So there is no time period for carry forwarding of your capital expenditure on scientific research. Unabsorbed depreciation ka bhi there is no time period. Capital expenditure on scientific research ka bhi there is no time period. And then there would be capital expenditure on family planning also, which you will see. Okay? In-house ka part is clear? And obviously, when you are claiming capital expenditure as deduction, then there is no question of depreciation claiming on such asset would come into picture. Clear? Yes or no? Now, in-house में there is one more part which is under my section 35 subsection 2AB. Now, here is the amendment. Earlier, there was a 150% weighted deduction. Now you get 100% deduction only. So earlier, what used to happen, if you used to spend 100 rupees, you used to get deduction of 150 rupees. But now it's 100% only. So those who are referring to all module can see that this is 150% only. So now it is equivalent to section 35.1.1 and 35.1.4. So now section 35.2AB says that if this is only for first company assessee, if you're a company assessee under this subsection and you are into a business of biotechnology or into manufacturing of any article or thing, into manufacturing of any article or thing, not being an article or thing as per 11th schedule. Ma'am, what is 11th schedule? See, 11th schedule may you have articles like beer, wine, tobacco, tooth powder, dental cream, soap, confectionery, chocolates, etc. So suppose I'm into a manufacturing of say car. I'm into manufacturing of car. Obviously, car may be lots of research and development goes. So I will be able to claim deduction under section 35 2AB, but I should have a proper approval from the certified authorities. Okay, so usme bhi I will get 100% deduction of revenue and capital expenditure, 100% reduction of revenue and capital expenditure except land and building, except land and building. So इसमें 35 2AB में I do not get the capital expenditure of land and building, but 35(1) clause 4 में I do get capital expenditure of building but not land. So ma'am, if a question comes, if we have the value of land and building combined, then you have to segregate it for the purposes of claiming reduction under section 35. Now listen carefully. I am into a biotechnology business. I invest in a building of say, sorry, I invested in a building. Okay, I'm into my biotechnology business. I invested in building. Will I be able to claim deduction under section 35 2AB? The answer is no. But I will be able to claim deduction under section 35(1) clause 4, which says capital expenditure on in-house research is allowed. So please be very careful if you are writing the sections. Earlier, it used to be more of a challenge because this was 150%, this was 100%, but now it would be very easy and smoother to do. But if you are quoting section, please, it's my request that please quote correct subsections. Okay, so land, if I'm into a biotechnology business, I cannot claim building under section 35 2AB, but I can claim building under section 35(1) clause 4. So an MCQ can come, a case scenario can come where the MCQ just asks that what is the deduction under section 35 clause 2 subsection 2AB, then you will not take building as capital expenditure as deduction. But in general, if they ask what is the deduction under section 35, then obviously you can take building as deduction under subclause 4. Okay, so please be very careful what the sections ask, what the subsections says. And if you have claimed the deduction under this section, then you cannot claim the deduction under any section. So now in-house research is clear. This is the 35 subsection 1 clause 1, 35 subsection 1 clause 4 capital expenditure, 35 subsection 2AB. All of these are for in-house research. That is when you as an assessee yourself conducting research. Okay. Now some third party contributions. Some third party contributions. So if I am an assessee, but I am not making any scientific research in-house, but I am making contribution or donations to other party who are involved into scientific research, to other parties who are involved into scientific research. So first is my notified research associations, university, college, or any institution. If I'm making them the contribution and they are making some research in the field of science, then I will get 100% that as deduction. 100% that as deduction. The donation of 100% would be deduction. Yes, Preeti, you can say wherever there was 150%, now it is replaced by 100%. Again, to claim contribution to third party as deduction, it is not mandatory that I should be into some related business, or it is not mandatory the payment which I am giving to them, they are utilizing it for revenue purpose or a capital purpose. The moment I make them the contribution, and if they are notified institutions, they are notified colleges, they will they and while making donation they were notified, and after making a donation they become not notified, still also I will get the deduction. Still also I will get the deduction. Or if I'm making a contribution to an approved Indian company for scientific research, please ignore the bad handwriting, I'll come to the PPT also. Notified research association, university, colleges, institutions, approved Indian company for scientific research. Or if I'm making the contribution to, again, notified research associations, university, college or institution for scientific or statistical research also. Earlier scientific research was 150%, now everything is 100% only. So you have to remember 100% for statistical research or scientific research. Or if I'm making a contribution to national laboratory, then also I will get 100% deductions. So this is my section 35(1) clause 2, 35(1) clause 3, 35(1) clause 2A, and this is 35(2AA). Okay, so full all 100% deductions. Research associations into scientific research 100%. Indian company for scientific research 100%. Again, research association for statistical research 100%. National laboratory or university or an Indian Institute of Technology IITs 100%. Clear? Now on this base, if I do a question, on your screen, please. A Limited engaged in the business of manufacturing furnishes the following particulars for the previous year 2021. Compute the reduction allowable under section 35 for assessment year 21-22 while computing its income under the head profits and gains for business and profession. Ambika, good question. Why there is separate? Because for this capital expenditure, you will get unlimited time to be set off. And why segregated? Because any normal business loss would be lapsed in the period of 8 years. And what is the purpose of giving capital expenditure as benefit when it would be lapsed in 8 years? So that's why income tax says that we are giving you this benefit, and at the same time you can carry it forward for indefinite period. We understand that at the beginning of scientific research, you obviously will not make the profits in the initial years, and by giving deduction and then getting it labbed in such a small time will be of no good. That's why there's a segregation, and that's why there's a time period of indefinite term. Okay, so everyone back at the question, sorry. A Limited engaged in the business of manufacturing furnishes the following particulars. Business of manufacturing, it's a company. 35 2AB can come, okay? Compute the deduction under section 35 for while computing its income under the head PGBP. Amount paid to notified approved Indian Institute of Science, Bangalore for scientific research. Allowable as deduction? Yes. Indian Institute of Science, it's not an IIT, so 35(1) clause 2. Amount paid to IIT Delhi for an approved scientific research program, 2,50,000, section 35, subsection 2AA. Amount paid to X Limited, a company registered in India, which has its main object as scientific research and development, as is approved by the prescribed authority, 35(1) 2A, 4 lakh. So 1 lakh is deductible, 2,50,000 is deductible, 4 lakh is deductible. Okay. Next, expenditure incurred on in-house research and development facility as approved by the prescribed authority. Revenue expenditure on scientific research, 3 lakhs. Capital expenditure, including cost of acquisition of land, 5 lakhs on scientific research is 7,50,000. Now, this is in-house. I am an Indian company into manufacturing business. So, and I have the approval as per the prescribed authority. I will claim deduction under section 35 clause 35 subsection 2AB. Now, revenue expenditure 100% deduction 3 lakh. Capital expenditure excluding land deduction 2,50,000. So total deductions would be 13 lakh. Now, students, whenever you're doing a question, please have a habit of writing, and if you're making a box, please have a habit of writing what are you doing in that box. Please do not just blankly start writing scientific research and all that. They should know that what is this computation all about. And again, I told you in the previous class also, except the main part which is asked in the question, everything else should go in your working notes. If you really want to good marks, score good marks, please keep these things, and these things will come not only directly in exam when you practice it on daily basis. Clear? 35 2AB clear, and 35 1/4 clear. That where you will take capital expenditure and where of building and where you will not take capital expenditure of building. Okay, so now scientific research is not over. There is one small topic also in it. Small topic, very small. So these I was referring, these will be the institutes which जिनको income मिलेगा as contribution, and that would be exempt under section 10 clause 21. They will receive the contributions and their income will be exempt in section 10 clause 21. I hope you can now relate it in a much better way. Okay, sale of asset used in scientific research. Two things will happen. Now, I am into my scientific research. I purchased the plant and machinery to be used for scientific research. One is that now I use it for other business and then sell it. Another scenario is I directly sell it after research is over. Preeti, I did not get why it is 35.2ab and not 35.1.1. See, again, when you have a specific section, then specific section prevails. Had this been a question of a normal person who is not a company, not into and their business of manufacturing or anything is not given, then obviously you would have taken revenue expenditure के लिए 35.1.1 and capital expenditure के लिए 35.1.4. But now since you have a specific section for a company which is engaged in the manufacturing and they have clearly written that the facility is approved by the prescribed authority, then you have to show it as 35.2ab. Okay, good. So now we were talking about sale of asset used for scientific research. I had a plant and machinery which I was using for scientific research. Now my research is over. Now one is I use it for my other business. So what will happen if I use it for my other business? Back to the previous class, explanation 1 to section 43.1. How many of you remember this first explanation which was there to section 43.1, that it's sold that if an asset which is used for scientific research is brought into business, then its actual cost would be nil for the block. Remember, would be nil for the block. Why it would be nil? Because when it was in scientific research, this plant and machinery, I had taken full value as deduction. So now for the other business, I will not add the cost and then claim the depreciation, because income tax means they say if a value is generated, the benefit is taken, it should be done only once. That's why this is generated, is the benefit I've taken in 35. Now I cannot take it in my normal business. So my actual cost would be nil. It would be added in block, and when it is sold, then whatever depreciation happen as per section 50, as per the block or part of the block, that you will calculate. Okay, clear? But question comes here. If directly sold, what will happen? Most of the time, and in many of the cases, the cost of the asset, suppose this cost was 100, I introduced it in my research, deduction claim under section 35 would be 100 only. In most of the cases, it is 100 only. So, and if I sell it at a price of say 90, 100 was claimed as deduction, that is debit in P&L, that is my profit would have been reduced while I have claimed deduction. Now, if I'm directly selling it, so whatever is the sale price or deduction, whichever is less, sale price or deduction, whichever is less, would become the part of my profit in P&L account. What did I say? Sale price or deduction, whichever is less, would become the part of my profit in P&L account. Why full sale price would become as an income? Because already you have claimed the full value as deduction in your profits. The full value of the cost has been claimed as deduction in your profit and loss account. So when it is being sold, either the deduction amount which was reduced in from my profit or the sale amount, whichever is lower, should be added in your income. Whichever is lower should be added in your income. Obviously, again, see, remember students, just like balancing charge and terminal depreciation, nothing will go while reversal or as an income in my P&L account more than what of the benefit was claimed in P&L account. I had claimed maximum up to 100 in my P&L account, so maximum up to 100 will only go in my P&L account. Over and above 100 will not go in my P&L account. So if the sale price is 120, then 90 would be my income in P&L account. Sorry, not 90, 100. Sorry. 100 would be taxable as income in P&L account. And this income is taxable under section 45(1), which is your deemed income section, Don't worry, 41 may we will go and 41 we'll do ek saath, but 41 may abhi we covered balancing charge. If you remember, profits for power generating units who are into SLM basis, if they sell it over and above the WDV but less than the cost, balancing charge, this will also go in my balancing charge. The sale price or the deduction, whichever is less. Now your modules, but what does your module says, and basically what does the Income Tax Act says? They give this formula which says sale price plus deduction minus cost or deduction, whichever is lower, would be treated as income in my P&L account. Sorry. Now I will say this is nothing but making just a small confusion. They say sale price plus deduction minus cost or deduction claimed under section 35, whichever is lower would be your income on the sale. I say in most of the cases, deduction and cost would be of the same price. So deduction plus deduction minus cost. So sale price or deduction, whichever is lower. So this formula basically helps when the cost is 100, but deduction claimed is 90. And your sale price is also at a lower amount, then it helps. But otherwise, this will not come into picture, and it would be always sale price or deduction, whichever is lower. Why I'm saying so? Because in 99.9% cases, whatever is your cost of the asset would be claimed as deduction under section 35, correct? So that's why sale price or deduction, but the Income Tax Act says like so. Now, anyone has any doubt, why are we treating it as income? Because I have, simple si baat, I have taken 100% as deduction. Now, whatever I'm receiving or whatever deduction claimed, whichever is lower, I have to offer it as income. And income as in my PGBP income. Okay, so this is over with scientific research also. We have completed our scientific research section 35. So we have completed section 33AB, 33ABA, which is in same lines, and your section 35. Now, before I take another heavy section, which is your section 33, 35ABA and ABB, let's take 5-10 minutes break and connect ourselves back at what, 7:35? Okay, so 7:35 we will begin, and we will begin with telecommunication services. Students, again, some people tend to skip subsections, but now you can have any question because of case scenarios, because of your MCQs. So it's better not to skip. Come up with a fresh mind in 10 minutes. Have some water, take a break. Yes, Ambika, absolutely correct. 20 will go in your capital gain. Very good. Jay sir? Jay sir? Welcome back, students. After the break, I hope you people got refreshed, had some refreshment. So now let's begin with our next topic. I hope everything is clear by now. Now we begin up with our next topic, which is our one second. Not 3580. We'll do first. We are not starting with 3580. We're starting with a section called 35A B A. Both of them are same sections. These are expenditure for obtaining right to use spectrum for telecommunication services. ABA is right to use spectrum. What is spectrum? And this is the license fee. Both of them are for the assessees who are in the business of providing telecommunication services. This is not for you and me who are into the business of providing telecommunication services. Both of them are for them. The 35 ABA talks about spectrum fee, 4G, 5G spectrums. So obviously to access the wavelength for that, all the telecommunication services have to pay huge amount of fees. Okay, and that fees is not every year. It is a one, as in it is a fee for which expand over a specific period. And similarly, to obtain or to work as a telecommunication operator, you have to obtain the license. Again, the license is not of some lakhs or amount. It goes in hundred of lakhs and crores rupees, and the license also has a lifetime of say 10 to 15 years. Okay, so both of them have the same treatment, but ABA covers for spectrum fee, ABB covers for license fee. So we'll do one, say we'll do spectrum or we do license. If we do license fee, you will understand spectrum fee. If we do spectrum fee, you will automatically understand license fee. Now, first question first. Remember, while doing depreciation, we used to say that your intangible assets would be depreciated at the rate of 25%. Intangible asset would be depreciated at the rate of 25%. Now, these are intangible assets. Spectrum fee is an intangible asset, yes? No. So if you have if you have a specific section discussing the treatment of a certain expenditure, you will go as per that treatment which is given in that section. If it would have been any other intangible asset, that you would have been depreciating it at a rate of 25%. But when we have a specific section covering spectrum or license fee, we will go as per that sections. Now, as per these sections, what happens is there is a concept called amortization. Generally, simple way में, simple सी sense में, I pay fees. Say suppose I'll take license. Okay, I pay fees suppose of 100 lakhs, and 100 lakhs is for the term of 10 years. So 100 divided by 10 from the beginning of the year, I will get deduction of 10 lakhs every year under 35 ABB or ABA as the case may be. Okay, simple. So 10 lakhs every year for 10 years, I will be claiming deduction. Now, this is not as simple because first here you have to remember is the deduction would be allowed from the year of commencement first, provided the fee is paid. Provided the fee is paid, meaning thereby, 100 lakhs, suppose, please listen carefully. If I've paid 100 lakhs in the year of commencement only, and I've paid full amount, then 100 divided by 10 for 10 years, I will get the deduction. But, If suppose, let me take one scenario. If suppose screen isn't visible, sorry, my bad. Sorry, Anjalika Ambika, sorry. Is it visible now? I hope so. Yeah. So I'll say again, 100 lakhs fees paid for 10 years. So 10 years, 10 lakhs every year, I will get the deduction. Simple. But the thing is, the deduction will become only when the business is commenced and only on the paid fee. Only on the paid fee. So let me take you through some case scenarios. Case 1, I have paid 100 lakhs as fees, okay, which is effective for 10 years. But I started my business only after say 2 years. I paid this fee in previous year 18-19, but due to some issues, I started my business only in previous year 2021. So the deduction will not go by 100 divided by 10 because now the license fee is effective from previous year 18-19 to previous year 28-29. Correct? The license fee would be effective from now, though I hope it is available. Yeah. License fee would be effective from previous year 18-19 to previous year 28-29. But I can claim my deduction only when I start my business. So I started my business in previous year 2021. So 2 years have been wasted. Now the fee would be amortized over the period of 8 years. The fee would be amortized over the period of 8 years, and every year I will claim deduction of 12.5. So again, deduction can begin only from the year of commencement. If I paid the fee earlier, the deduction would be begin only from the period of commencement till the number of life of that fees which is left. Okay, it would be amortized over that much period. It would be amortized over that much period. Simple. This is case 1. Now let's take case 2. 100 lakhs was fee payable. Okay. I in previous year 2021, I began my business. I paid only 50 lakhs. 100 lakhs is the fee for 10 years. So for previous year 2021 से लेके previous year 30-31, yes. Oh, बहुत दूर लगते हैं. Okay, so previous year 2021 से लेके previous year 30-31. Now, but I paid only not 50, say एकदम से taking out 100 lakhs is a huge amount. So I had a discussion with the authority and they said, okay, pay 60 lakhs now and then pay in after 2 years, that is in previous year, say previous year 23-24, pay 40 lakhs remaining. Okay. Now, how will the deduction would be, or for the amortization would be claimed for the license fee in year of commencement and the actual paid amount? I am paying it in the year of commencement only. So now the deduction would be like this 60 lakhs so would be amortized for the 10 years because beginning from the year of commencement when it is paid till its lifetime, I have 10 years. So this 60 lakhs would be amortized for 10 years. Sorry. So 6 lakhs each would be amortized. But the remaining 4 lakhs, remaining 40 lakhs which I paid in previous year 23-24, तब से till the lifetime I only have 7 years, right? I only have now 7 years left. I only have 7 years left now. So 5.71 lakhs would also start getting amortized, but from the year when it is paid, which is my previous year 23-24. So in previous year 23-24, 8 to 6 lakhs would be allowed as deduction, plus 5.71 lakhs would also be allowed as deduction. So total 11.71 lakhs would be allowed as amortization in previous year 23-24. So simple maths say the deduction would be allowed from the year of commencement till the time the fee is effective, till the time the fee is effective, provided it is being paid. If it is not paid, then whatever amount is paid and whenever it is paid till the time of its lifetime would be allowed as deduction. Simple maths. So in previous year 23-24, do not forget to take the 6 lakhs amortization of 60 lakhs, which was already going, and 40 lakhs amortization, which will begin from 23-24. Total amortization would come to 11.71 lakhs, which would be claimed as deduction in 35A, BB or ABA as the case be. You call it as amortization. You do not call it as depreciation when it comes to license fee or spectrum fee. Is it clear? Okay. Now one thing, students, very normal, interesting thing. Now to confuse you, what can happen is, suppose you are given a question, okay? Please carefully, everyone on the screen, that the license was acquired by paying a fee of 100 lakhs for 10 years on 1st December 2019. Previous year 1920 May, on 1st December 2019, I paid 100 lakhs for a license fee effective for 10 years. That means this is effective till 30th of November 2029. Yes or no? Yes. Now 30th of November 2029, which year would be coming? Definitely, Ambika, don't worry. 30th of November 2029, which year would be coming? Previous year 2029, previous year 30. Correct? Now, for once counted from previous year 1920 to previous year 2930, how many years are coming in total? 11 years. Count previous year 1920, 2021, total 2930. But the license fee is only effective for how many years? 10 years. Yes or no? It obviously will happen that the license fee is effective for 10 years only, but it may cover 2 previous years alongside, and this obviously happened when the license fee is paid in some middle of the year, not at the beginning of the year, but in the middle of the year. Then obviously one extra previous year would be attached. So instead of 100 lakhs dividing it by 10, you will divide 100 lakhs divided by 11. 100 by 11, so 9.1 lakhs or 9.09 lakhs you will claim as deduction every year. Okay, so please be careful, just in case a question comes that the fees was paid in previous year on so and so date. Please write the effective next, see how many previous years are there in which that fee would be effective. I'm saying it again and again. Please see how many previous years are covered in which that fee would be effective, and then divided by number of years, because in those previous years you will claim the deduction. Okay, so on this, now let's do one question which is given in your module. Okay. Sorry, done. Everyone, let's try attempting it first. question number 8, okay? Just in case there is any doubt, obviously I will be do, but I want you to make a try on whatever you have understood. Please write the figures, okay? Easy Call Limited to provide telecom services in Mumbai obtained a license on 1st April 2018 for a period of 10 years ending on 31st March 2028. Now, इसमें additional previous year will not come because 1st April से the license is only beginning. Okay? So there would be 10 years only. A fee of 27 lakhs to be paid in 3 installments of 9 lakhs each by April 18, April 19 and April 20. April 18 में he paid 9 lakhs, April 19 में he paid 9 lakhs, April 20 में he paid 9 lakhs. The company has commenced business only on April 19. Explain how the payment made for license fee shall be dealt with under the Income Tax Act 1961 and the amount, if any, deductible for assessment year 21-22. So for each fee, when it is paid, see the number of years it is effective, provided the business is commenced, and then calculate the amortization for that each fee. And in assessment year 21-22, which is the previous year 2021, full 3 years ka impact, full 3 fees ka impact will come. So please attempt it once. I've given every hint now. Answer, please. Anyone who has attempted? Okay. Now, please on the screen, students. First of all, the payment, again, I'll read it and then I explain it. The payment made for acquiring the license to operate telecom services in Mumbai shall be subject to deduction as per section 35 ABB. Why? Because it's a license, okay? If it would have been spectrum fee, you would take 35 ABA. As per section 35 ABB, any amount actually paid for obtaining license to operate telecommunication services shall be allowed as deduction in equal installments during the number of years for which license is in force. Correct? But the deduction begins only from the commencement of the business. In any other case, it will be allowed commencing from the year of payment. Deduction shall be allowed up to the year in which the license shall cease to be in force. Now, 2018-19 May, even if he paid 9 lakhs, but 1819 में the business was not commenced, correct? But the license fee is effective from 1819 to your previous year 2028-29, correct? But 1819 में तो license fee did not cannot be amortized. Yes, it would be amortized only from the beginning of previous year 1920. Now, when the previous year 1920 begins, how many year do we are we left with an expired period of license? Only 9 years. So 9 lakh, which is paid in previous year 1819, would be amortized over the period of 9 years, 1 lakh each. Secondly, 9 lakhs, which is paid in the previous year 1920, would again be amortized for the period of 9 years because the business has commenced then and the fees was also paid then. So from the fees paying date till the number of years it is in force is only 9 years. So 9 years for the 9 lakhs which is paid in the previous year 1920. Then in the previous year 2021, 9 lakh is paid, but now the license is effective only for 8 more years for this 9 lakh payment. So this 9 lakh would be amortized or over the period of 8 years, which would be 1,12,500 each. So for the previous year 2021, there would be amortization of 3 fees paid in 1819, paid in 1920, and paid in 2021. Total would be your 3,12,500 for the previous year 2021, 2020, 2021. Is it clear? What people make an error would be 9 lakh. This one would be amortized for the period of 10 years, then they will make it 90,000, which would be wrong. Okay. So even I myself in my exam had made this error. So please, again, I'm saying such questions can come. Do not take them lightly. And these are very easy concepts question, nothing technical also. Good, Ambika, very good. So is it clear now? How to amortize your license fee? Is it clear? Now we move ahead. Not moving ahead to the section. In this section, two types of questions only come. One is amortization of a license fee, the deduction, which is basically in relation to your 35 ABB and ABA and ABB. Second type of question comes is sale of license. Sale of license. Sale of license, full or part. Very simple. You people are pro at terminal depreciation and sale of assets. This is like a cakewalk to all of you. Please, everyone on the screen. I have used the license for some particular years. Now I am selling whole of the license. Okay. If I'm selling whole of the license, suppose, let's take an example as per your, let's take an example and then you will do the question. Let's take an example where I have a license which I purchased for a cost of 100 lakhs. I amortized it for 1 year. Then I amortize it for another year. Now my unamortized amount is 80 lakhs, or which your module says unallowed expenditure. Okay. This is on the data which is available to you. Now, if I sell the full license for a sale price of 70, so the difference would be debited to P&L account. Similarly, like terminal depreciation, take this this unamortized amount or unallowed expenditure as a written down value sold at a sale price which is less than the amortized amount. So difference is debited to P&L account. Like usme it goes in the head of terminal depreciation. Here you will just like write your loss on sale of license 70. Obviously your present unamortized amount is 80. You are selling it at a lower value. 70 would be your 10 would be your loss. So this 10 would be debited to P&L. Now case scenario 2. If I sell it for 95. If I sell it for 95, so the 15 ka difference would be credited in my P&L account as income. I'm saying purely your terminal depreciation and balancing charge ka part. 15 ka difference is credited in my P&L account because 80 was the unamortized amount, present values ka, and I am getting how much? 95 for it. So 15 is my income. Clear? Yes, simple. And if I sell it, again you will laugh. Ma'am, this is so now like a cake walk for all of us. For 127, suppose. Then up to 20. Oh, sorry, just got hang. 1 second, this gets hangs a lot now. Yeah, up to 20 in P&L income. 27, which is over and above 100, capital gain. Yes, yes, you know all, I know. Now for the part license. I have not sold the full license. I have only sold the part of it. I have only sold the part of it. Suppose the part of it I have sold for 60 lakhs. Part of it is sold for 60 lakhs. So 80 minus my 60. Unamortized was 80, 60 lakhs I have sold. How much it is left? 20 lakhs. 20 lakhs would now be amortized for the remaining life, which is 8 years. Which is 8 years. 20 divided by 8, 2.5 every year. 2.5 lakhs. Doubt? No, people are pro, I know. So 20 was the remaining. I have not sold the whole license. Had I sold the whole license, this would have come as loss. This would have came as loss, but I have sold only part of it. The remaining part would now be amortized for the remaining life of the license. Clear? Then, if I've sold it for 91 lakhs, 80 is the unamortized amount, 11 lakhs will go as profit. No other impact. Now, if I've sold it for 113 lakhs, same 20 lakhs income in P&L and 13 lakhs capital gain. Yes, this is that simple. Now I'll give you one question and you automatically would be able to solve it because that is totally simple on such concept. And then tell me, ma'am, whether it is clear or not. On the question? Sorry. On your screen, everyone, illustration. It is easy, yes? You definitely get it, right? Quickly. X Limited providing telecommunication services acquired a telecom license at a cost of 50 lakhs on 1st April 2018 for a period of 10 years. Assuming the telecom license is transferred by X Limited in previous year 2021, say for A 32 lakhs, B 43 lakhs, and C 52 lakhs. What would be your answer? Explain the treatment if the whole license is transferred, if the part of it is transferred. Quickly, everyone, hardly 1 minute I will give you to solve and then I will show you the solution. Practice, practice if you really want to restore such concepts in your mind. Everyone, and Ambika, please see whether it is part or whether it is whole. If it is sold at a price more than the unallowed expense or more than the unamortized expense, it will result in profit. Whether it is in part or whether it's in whole, it will result in profit. Profit till the amount of cost will go to P&L. Profit over and above the cost will go to my caption account. Only difference in full and part is that when full is sold at a price lower than unamortized amount, the difference is debited to P&L, and when the part is sold at a price lower than the unamortized amount, the difference is amortized over the years. Otherwise, the sale of license is same. The treatment in case of profit is same for part and whole. Everyone, please practice for your own good. I'm requesting again and again and again. Because we will remember the mota concept, but these small concepts we tend to forget with time. Okay, so again I'll say please see whether the question is for telecom license or whether it's for spectrum fee. Spectrum fee, all these answer will go as per section 35 ABA. License fee, all the answer will go as per section 35 ABB. Rest all same. So this is license 35 ABB. Cost of license 50, amortized for 2 periods. The unallowed expenditure or the unamortized expenditure is 40 lakhs. If transferred for 32, the remaining 8 lakhs would be allowed as deduction under section 35 ABB. If transferred for 43, the 3 lakhs would be taxable as profit. If transferred for 52, 10 lakhs as profit income, 2 lakhs as capital gain. I hope all of your answers have matched. Part of the license sold. Again, transferred for 32 lakhs. The 40 lakhs is the unamortized amount. Transferred for 32. 8 lakhs is left, which would be amortized for the period of 8 years. So 1 lakh each. So for the previous year 2021, the deduction would be under 35 ABB would be that 1 lakh. Transferred for 43 lakhs. 3 lakhs is my gain. Not gain as in profit taxable under PGBP. Transferred for 52. Again, profit taxable under PGBP 10 lakhs. And short-term capital gain of 2 lakhs. So if you see, whenever it is profit, whether it's part or full, the treatment is same, but only the treatment is differing at the loss part. Loss full is debited when the whole license is sold, which is common because now I don't have any license. So Why should I amortize over the year? But now since I have a part of license, I will amortize over the remaining period. Clear? Now we move ahead to our next very important section, which is your section 35AD. Okay. Now this section is called as section for specified business, investment linked tax investment, infrastructure linked tax investment, all of these. So please, I will request your attention on the screen now. Anyone has any doubt? Ambika, cost is 50 in this question, but 50 was when it was acquired in previous year 18-19. It got amortized for 2 years, just like in my example. This 10 years it got amortized, and then after it amortized over the years, now after certain period I'm selling it. Okay. First, you have to come to the current year value. Now, just like WDV, this is the expenditure remaining unallowed. WDV in real sense is what? The amount which is remaining unallowed, right? So this is also same. Shall we begin with 35 AD? This is a very important section. Investment linked tax incentives for certified businesses. Now, students, this section was to promote infrastructure in the country. By promoting infrastructure, I do not mean building your and mine houses, but at a broad level, having an infrastructure, and to promote such infrastructure, to promote assessees to be into such businesses, we will obviously discuss. They obviously give tax incentives. They gave tax incentives back. This is from your Finance Act 2009, if I'm not mistaken. Okay. So now they give tax incentives. Revenue expenditure for you, me, anyone who is doing business is allowed. But attractive section becomes, incentives become attractive when the capital expenditure is also allowed. When the capital expenditure is also allowed. So just like scientific research, this is again one such section where your capital expenditure is allowed. No worries. Okay, so now I hope Amika, is it clear? Chalo, great. Good, Ambika, you do not have to amortize in the year when you are selling it. Just like when you do not apply WD or depreciation in the year when you sell, similarly. And I'm clearly telling you, she's actually making an effort and she's actually coming up with the very practical red flags which any one of you can make mistakes. So please be participative. Now back to 35 AD. So I was telling you, this again is for incentivizing people. So first, if I tell you about everything and deep into details, let me just discuss with you what all are the deduction, what all are the businesses which are covered here. Those who have this, please try highlighting the businesses. First is my Ma'am, do we have to remember the business? You will read this list for 10 times. You will automatically remember the business because no one in question will say apply 35 AD. You yourself have to be vigilant enough that this is the business, and whenever business descriptions are given, please do not tend to just read it that line in a casual manner. Be very, very focused on it. If a business description is given, the business place is given, because business place it comes into business place becomes important when you're into a notified backward area. Business nature of business becomes important. Who is the assessee? Company is the assessee. Who is the assessee? Nature of business is important in your section 35. Sorry, for claiming additional depreciation, you have to be in manufacturing. So please be very, very, very attentive whenever the nature of business is given. And at your level, no one will tell you which section you have to apply. Okay. So 35 AD is for, again, specified businesses. These are your specified businesses. Cold chain facilities. If you are into a business of setting cold chain facilities, if you are into warehousing facilities for storing agriculture produce, warehousing facility for only agriculture produce, warehousing facility for garments, for textile business, no, that will not be a specified business. Laying and operating a cross-country natural gas or crude or petroleum oil pipeline network for distribution, including storage facilities being integral part of such network. That means you are into laying cross-country pipelines. Next, into a business of an hotel of a 2-star or above category. 2-star or above hotel. Hospital with 100 beds. You are running a hospital with 100 beds. You are into a scheme of housing project, but for slum redevelopment and rehabilitation. There are so many slum areas which are now being converted into housing societies. So if you are one such assessee who is into developing and building such housing projects for slum development, not a DLF we are talking about, but only for slum development. Or if you are into a housing project as per affordable housing, affordable housing. Affordable housing, government comes with affordable housing schemes like your DDA in Delhi's, Delhi Development Authorities. Those are your government, those are your entities which are into affordable housing. If you are into the business of production of fertilizers, then you are in a specified business. If you are into a business of setting up an inland container depot or a container freight station, you are running a specified business. If you are into beekeeping, production of honeys and beeswax, you are into specified business. If you are into warehousing facility of sugar, specified business. Transportation of iron ore, specified business. Operating a semiconductor for water fabrication manufacturing, specified business. And developing, maintaining any new infrastructure facility, you are into a specified business. Okay, so if I quickly tell, how will you remember? Storing facility, first is cold chain. Okay, then storing facility for agriculture produce and my sugar. Any other storing facility or warehousing facility not covered. Hotel covered. 2-star and above only. Hospitals, 100 beds covered. Housing project, affordable schemes and slum development. Then come to production, fertilizers, and then honey and honey wax. Okay, this is common category. Now I'm left with your cross-country pipelines for petroleum distribution, and then your transportation of iron ore pipelines. 2, then your inland container and or your water fabrication semiconductor. Bas, you are done and good to go. Okay, so these are your business. Now, what is the deduction allowed first? See, in 35 AD, small points are there. So I will recommend you to write them or write them in the side of the book so that you can remember to understand them. Excuse me, sorry. Now, first is revenue expenditure plus capital expenditure, full 100% deduction. Revenue and capital expenditure, full 100% deduction would be allowed for revenue and capital expenditure, but capital expenditure may land, goodwill, or financial instruments will not be allowed. Land, goodwill, or financial instruments will not be allowed. Secondly, you should not be a business which is formed by reconstruction, splitting up, or by a business already in use. Okay. Land, goodwill, financial instruments will not be allowed. Capital expenditure में one more thing. Any asset which is purchased in any mode other than account pay check, account pay bank draft, your electronic clearing system, or prescribed electronic mode for a value of more than 10,000 will also not be allowed. 10,000 tak hoga, that would be allowed. So if it's for 10,000, it would be allowed, but 11,000 or 10,001 rupees, it would not be allowed if it is in cash. 5 lakhs ka you purchased, out of which 1 lakh was in cash, so only 4 lakh would be allowed. Not that full 5 lakh would be disallowed, the whole cash amount would be disallowed. Clear? Then, isme bhi here also you get the expenditure which is for prior period, but only the capital expenditure which is capitalized in your books. That means you have shown them as your assets in your books. That would be allowed as deduction. That would also be allowed as deduction. Second thing you need to keep in mind is that for claiming 35 AD, you cannot have second-hand plant and machinery for a value of more than 20% of your total plant and machinery. The second-hand plant and machinery cannot be more than 20% of your total plant and machinery. So if I have total plant and machinery of 100 lakhs, in this up to 20 lakhs can be second-hand, but not more than that. In this 20 lakhs can be second hand, but not more than that. Another thing, second hand is the one which is used in India. If it is used outside India and then you're bringing it to India and using it for your specified business, it will not be regarded as second hand. It will not be regarded as second hand. Secondly, if you're claiming a deduction under section 35 AD, you will not be claiming deduction under section 10 AA, or you will not be claiming deductions under chapter 6 A heading C, namely your 80 IAs and 80 IBs. Okay, clear? And obviously, if you have claimed deduction under this section, you cannot claim deduction under any other sections. Questions come, ma'am. Do we need to remember the date of commencement of the operations of these businesses? Because these businesses were added in the list when this came back in Finance Act 2009. Only 3 or 4 businesses were there as specified businesses. But with time, in 2010, in 2011, and then latest by 2016, I think the businesses were added in these lists. So you don't have to remember the time period for the list, but you should have a rough idea that any business before 1st April 2010 would not have been a specified business, even if would not have been an eligible specified business to claim deduction, even if it's a hotel of a 2-star category, but which started say in 2001, would not be an eligible business to claim deduction. It is a specified business, but it is not an eligible business to claim deduction because it was not, it did not begin from say 1st of April or after, it did not begin roughly after 1st of April 2009, because again I'm saying to not remember the commencement date of these operations to be eligible to claim deductions. What you can easily remember is that Mota Mati after 1st April 2007 or 9, actually from 2007. So from 1st April 2007 se pehle if there is any business, definitely it cannot be my specified business for claiming deduction. Okay? Why I'm saying so, I will tell you why. So few things clear. One, that this full your raw material, I'm saying your revenue expenditure and your capital expenditure, 100% would be allowed as deduction, but not allowed in land, goodwill, and financial instrument. Allowed even before commencement of business, provided it is capitalized in your books. This is only for new businesses. Plant and machinery cannot be second hand up to the value of more than 20%. Imported plant and machinery are your new plant and machinery. Obviously, when you're claiming 100% capital expenditure, then depreciation will not come into picture. Your loss, now will come to loss part. Now I will come to the loss part. But to claim such deductions, audit is mandatory. Audit is mandatory. Either tax audit, or if you are required to be audited under any other act for the time being in force, that audit would suffice. Okay? So now for the set of thing. For the set of thing. Now set of under section. First thing is the loss of specified business can only be set off with the profit of specified business. The loss of the specified business can only be set off with the profit of specified business. You cannot set it off with the profit of some other business. The loss can only be set off with the profit of specified business. Yes, the loss of any other business can be set off with the profit of specified business. That is different story. But the loss of specified business, because this is a heavy loss because of capital expenditure being claimed, can only be set off with the profit of specified business. Again, this loss can be carried forwarded as per section 73A, which is a set of section for indefinite period. Now, interesting part comes here. Everyone on the screen, please. The loss of the specified business can be set off with the profit of specified business, even if this profit of specified business is not eligible for claiming deduction under section 35 AD. Ma'am, example, so if I have two hotel chains, one hotel of 3-star, another hotel of 4-star, but this 4-star hotel began in 1994-1995, suppose, and this began in 2013-14. If you do not see the beginning year, you will say both of them are eligible business, both of them are specified business. If you do not see the date, you will say both of them are specified business. But when you will see the date, you will see that for section 35 AD, the specified business should be started after a particular date, which is somewhere after 2007, 8, 9 or 10, right? So this is a specified business eligible under section 35 AD. But this is a specified business not eligible under section 35 AD, right? Because it began its operation in 94-95. That is when, before this section came into picture. But even if it is not eligible for claiming deduction under section 35 AD, still I can set off the losses of such specified business with such specified business profit. Even if the profit for which I'm setting off, even if the latter part, which is this, is not eligible for claiming deduction, but provided it's a specified business, If this is a falana declana business, say if it's a textile business, then I cannot set off. But if it's a hotel business, but just because of its commencement, it is not eligible, I still can set the losses of specified business from this. Also, capital expenditure, whenever you do while running a specified business, will always be deductible as your expenditure in section 35 AD. Clear? So on this note, let's do one question. Ambika, sale of asset and everything, I will come. Let me do this Madurai wala question with you. Mm-hmm. Okay, everyone, please on the screen. XYZ commenced operations of the business of a new three-star hotel in Madurai, Tamil Nadu on 1st of April 2020. The company incurred capital expenditures of 50 lakhs during January 20 to March 20 exclusively for the above business and capitalized the same in the books of accounts on 1st April 2020. Will I be able to claim the deduction? Yes, because they have capitalized it. So 50 lakhs would be claimed as deduction. Further, during the previous year 2021, it incurred a capital expenditure of 2 crores, out of which 1.5 crore was for acquisition of land. So 1.5 crore would not be eligible for deduction, only 50 lakhs would be eligible for deduction. Then compute the income under the head PGBP, assuming that XYZ Limited fulfilled all the conditions specified for claim of deduction and opted for claiming of deduction under Section 35 AD and has not claimed any deduction under Chapter 6A Heading C. The profits from the business of running this hotel is 25 lakhs. So 25 lakhs minus 50 lakhs ka capital expenditure 1 and minus 50 lakhs ka capital expenditure 2, which is of this. So 25 minus 100 lakhs, 75 lakhs का there would be loss. Clear? सबको clear अब तक? Then assume that the company has also another existing business of running a 4-star hotel in Coimbatore, which commenced operation 15 years back. It's a 4-star hotel, but it has commenced its operation 15 years back, even if it's a specified business, but it is not eligible for claiming deductions. The profits from which are 120 lakhs. Also assume the expenditure incurred during the previous year 2021 were paid by account pay checks or use of ECS through bank account. So now I have 120 lakhs Coimbatore wala business ka profit and I have 75 lakhs ka net loss here. Can I set it off? The answer is yes. I can set off the loss of specified business with the profit of specified business, even if the latter is not eligible for claiming deduction. So 75 lakhs ka jo loss hai, I will set it off from the profit of 120 lakhs. So I will have a net profit from the business of specified businesses of 45 lakhs. Clear? Anyone has any doubt? Any doubts? Take a moment to understand what is done till now before I go to this scene. Sorry. किसी को कोई doubt नहीं है from the specified business part? Okay. Now we move to the assets part of specified businesses. Okay. One thing is that if I have used a specified business asset, Ambika, setoff is for any specified business, not only hotel business, any specified business. It can be done with any specified business, but the point here to remember is that the profit from which you are setting off of a specified business may or may not be eligible for 35 AD, but it should be a specified business. That means it should be from the list which we discussed. The first list which we discussed, this, it should be from this category, but even if you have operated so many years back, that is even before the commencement of this section, but it should be from this particular category. Okay, everyone please on the screen. Now specified business asset mean there is one thing, that any asset which is used for the purpose of specified business should be used for the purpose of specified business and no other business. No other business for a period of 8 years. Now this 8 years begins from the beginning of the year when it was acquired. One second, students, some system hanging. One second. Oh. Jay sir? Yeah, shit. नहीं सर, वो कुछ जूम में प्रॉब्लम आ रही है, मेरी ऑडियो वीडियो दोनों पॉज हो गए हैं. मेरा जूम हैंग हो रहा है, जूम हैंग हो रहा है। हाँ एक सेकंड, जूम एग्जिट हो रहा है। शिट, वो sorry students, some app error. Okay, so now specified business, ma'am was telling you that specified business asset cannot be used for any other business beginning for the period of 8 years, beginning of the year when it is acquired. Now, beginning of the year when it is acquired means that if I acquire it today, so for previous year 2021 and for the next 7 years, I cannot use it for any other business. I cannot use it for any other business. Now, if I use it for any other business, or even if I go beyond what the rule says, then what will happen? Two things will happen. Suppose I was having one specified business and I was having one non-specified business. Please listen carefully. The specified business के लिए whatever building I was using, now I'm using it for a non-specified business. Now I'm using it for a non-specified business. So suppose in previous year 18-19, I had a building of 50 lakhs. Okay? I had a building of 50 lakhs. So what would have happened? Is this building for specified business, I would have claimed 50 lakhs as deduction under section 35 AD. Now, in previous year 2021, I started using this building for a non-specified business. For a non-specified business. Now, what will happen? Two impact will happen. One would be the deduction would be reversed. Deduction would be reversed. So 50 lakhs, the deduction which I claimed would now become my deemed income, but net of depreciation which would have been allowed. What is this? I will tell you. Now 50 lakhs so will become my deemed income minus of depreciation. See, if from the very first day itself, that is if from the previous year 18-19 itself, if from the previous year 18-19 itself, had I been using it for my own business or for any business other than specified business, on this 50 lakhs, at least I would have been getting deduction of depreciation I would have been getting deduction of depreciation, yes or no? Yes. 5 lakhs each at 10%, I would have been getting deduction. 5 lakhs for 18-19, then 4.5 lakhs for 19-20. Right? So 50 lakh, 50 lakh so would be income, but 5 lakhs and 4.5 lakhs, which I would have allowed as depreciation in those years, would be netted off to the reversal impact, and my net reversal would have been of 40.5 lakhs. So 40.5 lakhs would be my income. Instead of 50, 40.5 lakhs would be my income. I'm reversing the deduction, but I'm reversing the deduction of net of depreciation that would have been allowed to me had I used this asset for the purpose of non-specified business from its first day itself. Clear? So deduction reversal happened. Any doubt? No. Second impact would come off. Second impact would come off your block of asset addition. Your block of asset addition. This is deduction reversal. Why? Because specified business may I had claim deduction. Now for block of asset, now this building is becoming the part of my non-specified business. This building is becoming the part of my non-specified business. Yes. So now this building, since it's becoming a part of my non-specified business, it would be added in the block of assets. It would be added in the blocks of asset. Yes. Explanation 13 of 43.1. We did it in the previous class. At what value it would be added? At the value it was purchased minus deemed depreciation, which it would have been allowed for so many years. So at 40.5 lakhs, it would be added in my block of assets. At 40.5 lakhs, it would be added in my block of asset. This is one. Is it clear? Yes or no? And now when I sell it from the block, it would be sold it from the block directly. I'll come to the question part of it also. Another thing, students, which is as per section 28, again very important, students tend to confuse. If I was using an asset for specified business, and throughout the life I was using it for specified business, in say beyond 8 years also I was using it for specified business only. I was using the asset for say 15-20 years now for specified business, and now I sell. Now I sell it. These are the depreciation of 2 years. 50 at written down value, 50 pay 10%, 45, then 45 pay 10%, 4.5. For 2 years, that is for 18-19 and 19-20 to come to the correct WDV at the beginning of the year. So I can sum up in a way that WDV of the beginning of the year would be deemed income also, and at the other hand would become as an addition in the block of assets also. Now section 20, it says that whenever you sell an asset which is used for specified business directly, that means without using it for any other business, you sell it directly, then whatever the price, sale price, scrap price, termination price, sale price, scrap price, termination price, whatever I'm getting, disposal price, whatever name you say. If I'm selling it after 15-20 years, I'm selling it today, I'm selling it after 3 years, 4 years, 15 years, 20 years, whatever I'm selling it would become my income, full income, income as per section 28, which is my charging section. Income as per section 28, clause 7. So there are two things when it comes to asset which is used for specified business. One is selling the asset used for specified business directly without being used for any other business. So whenever I sell it, I whatever income I will get from, which is the sale price, the scrap price, the termination price, the disposal price, whatever I get, would be my income as per section 28 clause 7. Okay? Simple. So if I sell it for say 10 lakhs, 10 lakhs would be my income. If I sell it for 1 lakh, 1 lakh would be my income. Whatever price I sell it for, it would be my income. But on the other hand, I have to remember that a specified business asset cannot be used for any other business, cannot be used for any other business by the same assessee, cannot be used for any other business by the same assessee, at least for a period of 8 years, beginning from the year when the asset was acquired. If it is used for any other business in this 8-year period, then two things will happen. One, the deduction which was claimed in specified business would be reversed. And the reversal will happen how? The deduction amount net of the depreciation which would have been allowed had this asset been used for non-specified business from day one. Okay? This would be the deduction ka reversal. Because 50 lakhs deduction I have claimed, but if I have not claimed 50 lakhs, then in 1819 I would have got 5 lakhs ka depreciation. In 1920 I would have got 4.5 lakh ka depreciation in my profits as deductions, right? So hence only reversal of 40.5 lakhs. One impact. Second impact would be there in the block of assets. Block of assets may now the asset is getting increased in my non-specified business. So at what value it would be added? This was there in explanation 13 also. We did in the previous class. It would be added at the cost of deduction net of depreciation that would have been allowed. Excuse me. Okay, so to better clear it, let's do one question. ABC Limited is a company having two units. Unit A carries on specified business of setting up and operating a warehousing facility for storage of sugar. Unit B carries on non-specified business of operating a warehousing facility of storage of edible oil. Edible oil is a non-specified business. Unit A commenced operations on 1st April 2019 and it claimed deduction of 100 lakhs incurred on purchase of two buildings, 50 lakhs each, for operating a warehousing facility for storage of sugar under Section 35 AD for assessment year 2021. So Unit A May, which began on 1st April 2019, it purchased two buildings of 50 lakhs each. However, in February 2021, Unit A transferred one of its building to Unit B. So 50 lakh ka one building was transferred to Unit B. Examine the tax implications of such transfer in the hands of ABC Limited. Question clear hua? There is Unit A and then there is Unit B. Unit A is specified, Unit B is non-specified. Unit A has two buildings, each of 50 lakhs. One is transferred to Unit B. But those buildings were purchased in previous year 1920. Now, since the capital asset in respect of which the deduction of 50 lakhs was claimed under Section 35 AD has been transferred by Unit A carrying on specified business to Unit B carrying on non-specified business, deeming provisions will come into picture. Deeming provisions will come into pictures. And this deeming provisions are as per section 35 AD, not as per section 41. Abhi tak we have read section 41 only at two places. A good point that you are taking up. Section 41 we have taken up at balancing charge, and section 41 we have taken up at sale of scientific research. Here deeming provisions are as per section 35 AD only. Okay, so as per section 35 AD, whatever the deduction is claimed, net of the depreciation that would have been allowed would be my deemed income. So 50 lakhs was the deduction, but 1 year ka depreciation, that is for previous year 1920, would have been allowed. So 50 pay 5 lakh, 10% of 50 lakhs, 5 lakhs would come. So 45 lakhs would be my deemed income. One thing. So ABC Limited, however, by virtue of proviso to explanation 13 to section 43 subsection 1, which is your actual cost, can claim depreciation under section 32 on the building in unit B. Now 50 lakhs wala jo building has been transferred, uspe you will be claiming the depreciation. But what would be the cost? The cost would be the same as the amount of deemed income, because the cost less of depreciation which is allowable, 50 minus 5, 45 lakhs would be the cost. Now, is it clear, Sabita? Ambika, everyone else? Sabita, is it clear now? Simple impact is this, what you have to understand. See, if you have used that asset from day one, whatever would be the WDV today, would be the WDV today. If you have used that asset from day one, you have claimed the full value as deduction, uska reverse karo, net of the depreciation which you have been claiming in the preceding years. That's it. Okay. But yes, having said that, this 8 years provision, that is that the asset should be used for specified business for 8 years, is applicable, is not applicable for sick industries, is not applicable for sick industrial company. And pipeline wali business mein, the FSC should be the company only. These 2 points are just general points which should be taken care of. Okay, so now before we end our class, just small 3 sections so that it does not linger on to the next class. So in the next class, we start with preliminary expenses for reduction, which would be a 35D. We'll be doing 36, 37, 40A, 40 clause A, then section 40A would be on our to-do list for the next section. So next class is very, very, very interesting, and there would be so many small things which would be covered from one section to another. We'll be hopping on, and very interesting things would be covering up in the next section, which you could relate much more than what happens today, because the today sections were for specific entities, right? So just 1 minute before we go. Meanwhile, if you have any doubt for me to answer, you can write it down in the query sections. Okay. So other admissible deductions, there are three admissible deductions mode, which is for your 35cca, 35cc, and 35cd. Now, 35cc is when you make a contribution to any notified fund which is conducting rural development programs, your notified rural development fund or your notified national urban poverty eradication fund. Okay, who are into such program, whatever contribution you make by an expenditure would be allowed as deduction, but you need to furnish the certificate and you cannot claim deduction under any other section. Okay, very rare this section comes. But agriculture extension project and skill development project there is one change. Earlier 150% deduction was allowed, now 100% deduction is allowed. What are these two? 35cc is on agriculture, if you make an expenditure on agriculture extension project. Now what happens, students, assessees are encouraged to make schemes like a project, get it notified by CBDT, where you which are called as agriculture extension project, which has an aim to basically educate the farmer, trains the farmer, provide guidance to such farmers. Okay? And generally the cost of such project is more than 25 lakhs. So you as an assessee set up an extension project. Whatever expenditure you do on such project would be allowed as 100% deduction. Okay? Then expenditure on skill development project. This is only for company assessee. 35cc is for all assessees. 35ccd is only for company as assessee. So if you are into a skill development project, skill development projects are what? Like for your employees, you start up with some projects to enhance their skill, to train them for their jobs. These are called your skill development projects. On skill development projects, whatever expenditure you do, up to the extent of 100% would be allowed, but not of land and building. But not of land and building. But again, this is only to company assessees. For claiming the deductions for both such projects, you need to maintain separate books of accounts, which need to get audited by the accountant. It's not that I start myself such project. These projects are to be notified by the CBDT to claim the deductions. Okay? So 35cc agriculture extension project, 35ccd. Please instead of 33 write it as 35ccd. Okay? So in the next class, we'll begin with amortization of preliminary expenses, some amalgamation and demerger related expenses, and in next 10 minutes, we'll start section 36. I hope all your queries were answered for the class today. Do study them, because today's was a very variant class, some very new concepts for you all. And please remember the sale of assets for all sections, whether it's your tea, coffee, rubber development, scientific research, your telecommunication services, your 35 AD. Please try remembering sale of assets, most importantly for all of them. What is the income, or what is the deduction which is allowed as per these sections. Okay, so I'll take the leave for today. Thank you so much, everyone. Again, practice, 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 and take care of yourself. Good night. Yes, sir. Okay, sir. Yes.